Hey everyone, in this video we're going to go over Tesla's Q3 earnings report, analyze the entire earnings deck that came out today. But before we do, if you could smash the like button, it really helps the YouTube algorithm. And if you haven't subscribed to the channel, please subscribe. We actually also have some great news. We just passed 4,000 watch hours, so this channel is officially a monetized YouTube channel, which is awesome. I appreciate all your support. Now let's get into it. On the first page, we basically see the highlights in the summary from Tesla's Q3 earnings report. We're going to start with the highlights here, and then we're going to go over the summary. As far as cash, operating cash flow, less capital expenditures, so basically free cash flow of $1.3 billion in Q3, net debt and finance lease repayments of $1.5 billion in Q3. In total, there was a $164 million decrease in our cash and cash equivalents in Q3 to $16.1 billion. Now, the decrease is only because they paid debt and finance lease repayments of $1.5 billion, whereas they only generated free cash flow of $1.3 billion. So we're basically talking about, close to a $200 million difference here. Now, it's important that they're paying off the debt. Just for those that don't understand, the more debt they have to make interest payments on that debt. So reducing debt makes their balance sheet better. This is a great thing. They were profitable, they had great free cash flow, and they reduced their debt and finance lease repayments so that they can make less interest payments and have a better balance sheet. Next, it goes over profitability. It says $2 billion in GAAP operating income, 14.6% operating margin in Q3, $1.6 billion GAAP net income, $2.1 billion non-GAAP net income, excluding stock-based compensation in Q3, 30.5% GAAP automotive gross margins, 28.8% if you're excluding the regulatory credits that they get in Q3. This is massive gross margins. This is a really, really impressive number, more than I thought it'd be at this point. I know they were targeting 30% for the long run, but it seems they're going to continue to even get better than 30% down the road, which makes analysis for the future prospects of Tesla stock even crazier. As far as operations, they basically say that there were record vehicle production and deliveries in Q3. No surprise there, they're constantly breaking records. Started to roll out FSD and City Streets beta to a wider population in October. Personally, I did request the beta on my Tesla, and I'm waiting to hopefully join the FSD beta soon. As far as the summary, they basically say the third quarter of 2021 was a record quarter in many respects. We achieved our best ever net income, operating profit, and gross profit. Additionally, we reached an operating margin of 14.6%, exceeding our medium-term guidance of operating margin in low teens. Perhaps more impressively is that this level of profitability was achieved while our average selling price decreased by 6% year over year in Q3 due to continued mix shifts towards lower-priced vehicles. Our operating margin reached an all-time high as we continue to reduce costs at a higher rate than declines in average selling price. EV demand continues to go through a structural shift. We believe the more vehicles we have on the road, the more Tesla owners are able to spread the word about the benefits of EVs. While Fremont Factory produced more cars in the last 12 months than any other year, we believe there is room for continued improvement. And I will say, I listened on the earnings call, they said they believe they can get another 50%. So they are not stopping here. Lots of more expansion coming to the existing factories besides building out the new ones. To continue what he was saying, they said, additionally, we continue to ramp Gigafactory Shanghai and build new capacity in Texas and Berlin. A variety of challenges, including semiconductor shortages, congestion at ports, and rolling blackouts, have been impacting our ability to keep factories running at full speed. We believe our supply chain, engineering, and production teams have been dealing with these global challenges with ingenuity, agility, and flexibility that is unparalleled in the automotive industry. We would like to thank everyone that helps advance our mission. Now we're going to go over some of the financial summary. So as far as automotive revenue, we can see from Q3 2020, a year ago, it was $7.6 billion. It has risen this year to Q3 2021, being this quarter $12.057 billion. That's a 58% increase year over year in revenue. And as we see as time passes, the revenue has continuously increased. Obviously, there was a small drop in revenue from Q4 2020 to Q1 2021. Not much of a drop, 9.3 billion to 9 billion, but that's because Q4 is the busiest time of the year and Q1 is usually the slowest time of the year. But 9 billion was a huge Q1 compared to any past Q1. And now 12 billion. We've never had a $12 billion quarter, so this is amazing. Of which are regulatory credits. To keep in mind, regulatory credits have went down 279 million. That's a 30% decrease in regulatory credits. So 12 billion revenue, this is not because of regulatory credits. Only 279 million were credits, which is awesome that Tesla still can get them and use them to help R&D and different projects. But they obviously do not need them. When people say they're relying on credits from governments or companies, that's just not true. They do not need these credits to survive or to thrive in any way. As far as automotive gross profit, we hit $3.673 billion in automotive gross profit. This is a 74% increase year over year compared to the 2.1 billion in automotive gross profit in Q3 2020. And as far as automotive gross margins, which is extremely important, we went from 27.7% gross margins in Q3 2020 to 30.5% gross margins in Q3 2021 with less regulatory credits and with reducing the cost to sell the car, the average selling price of the cars. This is extremely impressive and totally underappreciated by the market, I think. Massively underappreciated. Now, as far as total revenues, not just automotive revenues, we're at 13.757 billion. That's a 57% increase to the 8.77 billion. This is including, obviously, energy, things they sell in their store, supercharging, all types of stuff. So basically, that's the difference there. And we are talking about $1.7 billion more than the 12 billion in automotive revenues. So that others business is just, it is a pretty big business. And I think we will see it expand a lot as more battery capacity comes online, so they can start to basically give more batteries to the energy products with power walls and mega packs, etc. Now, getting back to this chart, total gross profit, $3.66 billion, basically a 77% increase over the $2.063 billion in profit, gross profit that we had a year ago, Q3 2020, and quarter over quarter, it went from 2.88 billion to 3.66 billion. So nice increases there. Total GAAP gross margin, 26.6%, which is really, really great. We're talking about an increase from 23.5% in Q3 2020 to 26%, 26.6%, and a quarter ago it was 24.1%, which was already really high, beating out the 21% we had in Q1. So we are seeing really nice increases across revenue, across margins, everywhere. That's awesome to see. Now, the next thing basically on this line to look at is operating expenses. As far as operating expenses, we did see 32% increase in operating expenses as they make more cars and as they're expanding, building new factories. Their expenses are going to go up. So $1.656 billion in operating expenses. But the operating margin, because if you take the income from operations, which $2 billion in income, which is also extremely impressive, we're talking about a 148% increase for their income from operations from a year ago, 809 million to over $2 billion in income from operations. And that's an operating margin of 14.6%, which is amazing. I mean, literally in the past year, we've never had anything over last quarter, which was 11%. Before that, it was 5.7%, 5.4%. And a year ago, we had 9.2%. But we never really had over 10% margins as far as operating margins since last quarter. And now to see it go from 11% to 14.6% is extremely impressive. I can't wait to see where that goes into Q4 and beyond. Now, if we just skip down to the bottom, you can see free cash flow of 1.328 billion. This was down 5% year over year compared to the 1.395 billion, but up quarter over quarter. Last quarter was 619 million. Now, keep in mind, we had capital expenditures this quarter of 1.8 billion. A year ago, those capital expenditures were just 1 billion. And that CapEx is basically going to provide lots of free cash flow going into the future. Our current cash and cash equivalents is 16 billion versus 14.5 billion a year ago. But keep in mind, we are reducing debt. We are spending money. It would have been higher than 16 billion if we weren't making these payments to reduce the debt. Now, the next page is basically going to say some information on the revenue, the profitability, and the cash. So as far as revenue, total revenue grew 57% year over year in Q3. This was primarily achieved through growth in vehicle deliveries, as well as growth in other parts of the business. At the same time, vehicle average selling price declined by 6% year over year, as the Model S and Model X mix reduced year over year in Q3 due to product updates, as lower average selling prices vehicles became a larger percentage of our mix. As far as profitability is concerned, they write that their operating income improved to $2 billion in Q3 compared to the same period last year, resulting in a 14.6% operating margin. This profit level was reached while incurring stock-based compensation expense attributable to the 2018 CEO award of $190 million in Q3, primarily driven by a new operational milestone becoming probable. Now, operating income increased substantially year over year, mainly due to vehicle volume growth and cost reduction. Positive impacts were partially offset by the average selling price decline, growth in operating expenses, lower regulatory credit revenue, additionally supply chain costs, Bitcoin-related impairment of $51 million, and other items. Now let's just break down some of this. The last thing they said, Bitcoin-related impairment of 51, they're actually saying that they're taking a $51 million loss on their Bitcoin. It's not an actual loss. That loss is just because they have to, if Bitcoin was at a lower price than they paid anytime during the quarter, they have to pretend basically like the lowest price it is in the entire quarter as if that's what it was right now. But it is up significantly. They're very profitable on that Bitcoin purchase. So that 51 million losses, it's just like a fake paper loss written down for now, but it's not an actual loss that they have. Now, cash, quarter-end cash and cash equivalents decreased to $16.1 billion in Q3, but driven mainly by net debt and finance lease repayments of $1.5 billion, partially offset by free cash flow of $1.3 billion. Our total debt, excluding vehicle and energy product financing, has fallen to just $2.1 billion at the end of Q3. So they have reduced their debt down to $2.1 billion. Now, this next chart, operational summary, as far as production is concerned, we did get these numbers before, but now they just really, they basically could be slightly different than on the delivery number. They always say it's going to be off by a little bit, and then during the earnings report, we get the exact numbers. So total production, 237,823 in Q3. Again, that is 64% more cars produced than a year ago when it was 145,000 cars produced a year ago. So they are basically ramping up their car production. It's, at an incredible speed. And as far as deliveries, they delivered 241,391 cars, up 73% from the deliveries a year ago of 139,593. Now, total end of the quarter operating lease vehicle count, there's 108,757 vehicles with leases 76% more than a year ago. Global vehicle inventory, days of supply, basically. So they have 6 days of supply. Now, as you can see, that number has went down from like Q2, there were 9 days of supply. Now there's only 6 days of supply. But you also have to keep in mind, as they can make more cars, they can deliver more cars per day. And if they can deliver more cars per day, 6 days in this quarter versus a year ago, 6 days, are two totally different numbers. So you have to keep that in mind. Now, you could do all the math. I'm not going to go into the math for it because it's not that important. But basically, a year ago, there were 14 days in Q3 of 2020. They ended with 14 days worth of inventory. Now they're ending with 6 days. Maybe 6 days now is kind of close to what 14 days then would have been as far as total deliveries. Because they're probably delivering twice as many, going forward from this point. Now, as far as solar deployed, as far as megawatts, there was 83 megawatts of solar deployed. A year ago, there were 57 megawatts in Q3 of 2020, so that's a 46% increase year over year. I would like to see this get higher. We have had it higher before. In Q1 of 2021, it was 92 megawatts. I do expect this to increase over time as they put more attention to it and get prices down. Storage deployed, as far as megawatt hours, we're at 1,295 megawatt hours of storage deployed. That is a 71% increase year over year compared to the 759 megawatt hours deployed in Q3 of 2020. Again, this is not the highest number. In Q4 of 2020, we did 1,584 megawatt hours deployed. But this is, it's a number that depends on the projects going on. There's sometimes these massive projects that Tesla's working on for deploying battery storage with companies, and a lot of it can hit in one quarter and then not hit for the next quarter till the next deal comes through. But I do expect we're going to continue to see increases over time. We had a 71% increase year over year. That's a huge increase, and I think we're just going to keep seeing increases, and battery storage is going to be a much bigger part of the Tesla story going forward. As far as store and service locations, we are now at 630 stores or service locations. That's 35% more than a year ago when there were 466 stores or service locations. So they are increasing stores, increasing service locations, and mobile service fleet, which is amazing. I've had Tesla mobile service come fix things for me. They come to your house, they come to work, they'll meet you. It's amazing. There is 43% more on the mobile service fleet than there was a year ago. So at the end of this quarter, 1,190 mobile service cars versus 833 a year ago. As far as supercharger stations, a super important part of the story where people can charge. This is one of the things that I think is just a game changer for Tesla. I could never buy another electric vehicle if it wasn't a Tesla, just because it doesn't have access to the supercharger stations. Now, Elon has said that they are going to give access to other EV makers, as long as they pay their fair share, whether it's licensing it or opening it up through letting people use an app and an adapter. But regardless, for now, this is only for Tesla. 3,254 stations that combined in those stations have 29,281 connectors. This is basically a 50% increase from a year ago. 49% more stations than a year ago, and 51% more connectors than a year ago. So they are adding, even on each station, they're increasing the amount of connectors basically. Now, I truly think the supercharger station is basically something that is going to keep Tesla ahead for a long, long time. They've been expanding this network for so long. If any other automaker wanted to do this, it would take forever for them to get to the point superchargers are at now. And by that time, imagine how many stations there'll be by then, because Tesla is literally, they're not stopping. Quarter by quarter, you just look, it goes from Q3 2020, 2,181 to 2,564 to 2,699, 2,966, 3,254. I mean, they are literally adding hundreds of stations, not just chargers, but actually stations each quarter. And a quarter is only 3 months long. I mean, it's really impressive to add that many chargers across the world. And we're not talking about just the US. This is a global project. Now, vehicle capacity is extremely important because you can only deliver cars if you're able to produce cars. On the right, let's start there. Installed annual capacity. As of right now, California has the ability to make 500,000 Model 3 and Ys and 100,000 Model S and Xs produced, so 600,000 cars. And Shanghai is currently able to produce more than 450,000 cars. Now, obviously, these numbers are going to continue to go up. On the earnings call, we heard them say that they expect California to get 50% more capacity out of that factory. Now, that's a lot. We're talking about going from 600,000 to close to 900,000. They're probably internally maybe even trying to get to 1 million, to be honest. And we know Shanghai they're trying to get over 1 million. I think, honestly, I'm expecting Shanghai in its final stages to be producing 2 million cars a year. And I expect the same from Berlin and Texas. So in my, they don't tell you right now, it just says under construction for Berlin and Texas. But I bet eventually, because the numbers you see are current numbers, we're talking about 1,050,000 cars are currently able to be produced. But as they keep increasing capacity at these factories, I think eventually we see Texas, 2 million, Berlin, 2 million, that's 4 million, Shanghai, 2 million, that's 6 million, California, 1 million, that's 7 million. And then they are going to obviously be opening future factories too. So their goal is 20 million cars per year by the year 2030 being produced, and they expect to make bigger factories producing much larger amounts of cars than many smaller factories. So I think that their goals are about 2 million cars a year in each factory once they are fully scaled. Now, they do show here on the bottom market share of Tesla vehicles by region. As you can see, US, Canada, Europe, and China, as time has went on, they are taking market share. Now, obviously, they're not showing of only electric vehicles. This is of the entire market of automobiles. They're basically increasing market share in every region. It's going to be, a long way up. We are still just under 2% market share in the US, and still just over 1%, under 1.5% for Europe and China. There's a long way to go. So when people think like, oh, this is the end for Tesla, the end of the story, it's already up so much, we are at just the beginning for Tesla as far as it being a business. All the bulk of Tesla's profits it will make as a company are far ahead of it. It's not now. This is, we're talking about decades from now. So US, California, and Texas, our Fremont factory produced 430,000 vehicles in the last 4 quarters, and we believe there's room for continued improvement. Model S production continued to ramp successfully in Q3, and Model X production ramp and first deliveries have begun. So they started delivering the new Model X, and obviously we've been seeing a lot of people getting their Model S. I have my Model S order. It's expected deliveries in December, so I'm excited for that, for my new Model S. Gigafactory Texas is progressing as planned. We're in the process of commissioning equipment and fabricating our first pre-production vehicles. China, Shanghai, for all of Q3, China remained our main export hub. So basically, they are sending all cars to Europe out of China instead of the US now, which is extremely smart, more profitable, and allowing US to just deliver directly their cars from US to US customers. The shorter a car gets delivered, the more profitable it is. Less time you need to spend shipping around the world as well. Production has ramped well in China. We're driving improvements to increase the production rate further for standard range vehicles. We are shifting it to lithium iron phosphate, LFP battery chemistry globally. Now, Europe, Berlin, Brandenburg, that factory build-out remains on track with testing of equipment well underway, and we expect to receive final permit approval before the end of the year. He did say in the shareholder meeting, the annual shareholder meeting that happened not that long ago, that he does expect deliveries from Berlin or Austin, I forget if it was for both of them or one of them, to actually start before the year ends. So a couple deliveries in Q4, but obviously it will take about a year to ramp those factories. So, not even 2022 is going to be awesome because we're going to have these new factories running, but 2023 is going to be the year when those factories are ramped up, probably not full capacity, not 2 million yet a year, but ramped up in their first stages, fully ramped, and that's when we're going to see massive gains in deliveries and production and revenue, etc. 2023 is going to be an insane year for Tesla, mark my words. Now, core technology is the next slide, basically going over autopilot and full self-driving. In Q3, we hosted AI Day, they say, our recruitment event to attract the best AI talent. After presenting our end-to-end vision of full autonomy, fleet data collection, labeling, simulation, neural net training, vehicle processing, as well as our next-generation neural net training chip and humanoid robot project, we have received an overwhelming number of applications. So AI Day went amazingly well. It was basically a recruiting day to get people to try to apply to work for them in the field of AI, and it was a successful event in that it got people to apply like crazy. Now in October, we started to expand our FSD City Streets beta to more drivers based on demonstrated driver safety and attentivenesses measured through their safety score. We continue to monitor fleet data closely to help facilitate a smooth rollout. So if you're not familiar with this, Tesla has the ability now, you can opt in if you want to get FSD beta to basically get a safety score. It analyzes how you drive your car, and it gives you a safety rating, how safe of a driver you are. Now, this is extremely important because eventually when FSD is perfect, who cares if you're a safe driver or not? It won't matter because they're going to be the safe driver for you. But what this is doing, people are choosing to opt into this. Myself, I opted in because I want FSD beta. And by doing this, this is really a key way to get your specific driving data and to basically create the insurance products, which is going to be huge for them. They're going to be able to offer you insurance at a better price than anyone else because they can have all the data to know how safe you are. If you're really a good driver, you shouldn't have to pay as much as someone who's a horrible driver. And there are companies who try to do this by having you install something in your car, but no one has the amount of data that Tesla has on each individual car. The amount of sensors and things that they can pick up on, it's incredible. And they have the engineers to take that data and create amazing algorithms to really decide, what is the probability that you'll get in an accident based on how you drive. Now, We already know they expanded that insurance product to Texas. There was an insurance product in California, but that was just a general insurance product. I believe they're swapping over to this, like a la carte custom insurance product. But in Texas, it just released. You have your safety score, and basically every day that you drive, they're going to give you a rating. And based on that rating, the price for your insurance is going to be higher or lower for the day, and you're going to have an average for the month. And they think that they can give people who are good drivers really cheap, ratings. And the more you drive on autopilot and FSD, the better FSD gets. And the more you use it, they consider when you're on autopilot or you're on this FSD mode that you are a good driver, because they expect that, they call their system a good driver. So when you use it, and if something happens, like it breaks hard or this or that, they don't blame you if it's their system. You don't get any deducted points. You have 100 score out of 100 while on autopilot. So it encourages the use of autopilot. And the more you use autopilot, the better autopilot will get. So it's just a great flywheel they have. Now, to go on into more technology that Tesla has to really just show they're not just a general car maker, like people who've never used a Tesla and think they're just like everyone else. The vehicle software is incredible. So as far as vehicle software, they released a refreshed mobile app in Q3, streamlines the user experience, enables phone keys for multiple vehicles simultaneously. So you can have your phone key for, if you have more than one car, you don't have to swap cars in the app. You can just walk up to either car, it's going to work. Allows commands to be sent to the vehicle immediately upon entering the app. So just basically a better interface. You can quickly get to the most important things in the app. Integrates the purchase of upgrades, subscriptions, and accessories. This is a great thing. So you don't have to go to the website, tesla.com, to buy the next upgrade. And these are software upgrades. Like there are speed boosts. There are, if you want to buy FSD and you don't have it or subscribe to pay monthly, you could do that all from within the app now. They also added Disney Plus streaming video service, the Skyforce Reloaded scrolling arcade shooter game, and a car wash mode, and a number of other improvements. Now, I personally have got this update. It's awesome when your car gets an update and can do things it could never do before. That is something Tesla has that no one else has. The ability that I get in my car and all of a sudden I have Disney Plus in my car, or I have this car wash mode that I've used car wash mode since it just came out. You take a car wash, you click it, and because they're automatic wipers and things like that, when they start washing your car, it's not going to send the automatic wipers off. It's going to, it knows you're getting a car wash. So these are things that are just innovative, and they're going to keep innovating, and it's going to keep getting better. It's the only car you can buy that gets better after you buy it. You buy it, the day you buy it, it's the worst car of itself. It is a better car the day you're trading it in or selling it or whatever, because of all the updates it's had. Now, battery and powertrain, huge advantages that give the performance and the range to a Tesla that other cars just don't have. The 4680 in-house cell project continues to progress. That is their basically cell that they're making. They're making their own battery cells. So people who think, oh, they don't make batteries, like that's a lie. They just buy batteries from other companies. No, they need as many batteries as they can get. So they will buy batteries from anyone to ensure they have them, while they're going to produce their own batteries in-house, which is a huge leap forward, their battery, the 4680 cell. And they say that they're producing an increasing number of battery packs for testing purposes, and so far the test results meet their current expectations. Front and rear body castings, both needed for our structural battery pack architecture, are being produced at Gigafactory Texas. So they are making these advancements. Now, those things, when they actually get implemented into the cars that are being delivered, the structural battery pack, that is going to increase margins. That is going to make these cars even more profitable. They are lowering the cost to make a car with these types of innovations. So, their margins are insane right now. Just wait until that is fully implemented in these new factories. Now, energy storage deployments increased 71% year over year in Q3, another huge improvement, mainly driven by strong Megapack deployments. We recently announced our new Megapack factory. So it's a new factory just to make Megapacks. Capacity of 40 gigawatt hours, which compares to the total Megapack deployments of 3 gigawatt hours in the last 12 months. So they're very excited about the broader potential of this product. They are going to really increase Megapack capacity. So if you look on the right, Megapack only capacity currently being built, 40 megawatt hours. Compare that to the little red line. That's the past 4 quarters combined. We're talking about a huge increase coming for battery storage. Now, solar retrofit and solar roof, solar deployments were 83 megawatts in Q3. This was an increase of 46% year over year, with cash/loan purchases accounting for nearly all solar deployments. So they're not renting them. They're basically just buying these systems. Solar roof deployments more than doubled year over year and continue to grow sequentially in Q3. We're making further cost improvements, particularly in the installation side. They're trying to reduce the cost to install these, get them installed quicker, in order to increase the profitability of our energy division. Services and other, insurance. In Q3, we rolled out our safety score functionality, which will also be used for our telematics insurance product. We actively monitor braking, turning, tailgating, unsafe following, forward collision warnings, and forced autopilot disengagements in order to predict the probability of a collision. This system will continue to be fine-tuned as we receive more data. We also launched our telematics insurance product in our first state, Texas, in early October. We believe our insurance premiums will be able to more accurately reflect chances of a collision than any other insurance product on the market. Additionally, we are proactively communicating to the user what driving adjustments need to be made to decrease the probability of a collision, and also basically to reduce the cost of your insurance. Now, on the bottom right, the last important part about this is that the services and other gross margin, like, is this a profitable business for Tesla? It has a clear trend from 2017 until now, heading up to the right, to go from being a negative margin business where they're losing money towards basically we're about at break even here. But as this stuff scales, if you look above it, when Megapack capacity is at that number versus where it is now, with scale, margins are going to get better. They're going to be extremely profitable. That is going to be extremely exciting to see, because in 2023, when they got those factories pumping out cars and making tons of money, high margins on those cars, and energy is not a drag pulling, not making a profit and taking a loss, just imagine how crazy those earnings are going to look then. So really great things to come. Tesla then wants to give the outlook. Now, as far as volume, we've already known this. They say this all the time. They're expecting 50% average for annual growth in vehicle deliveries over the long term. Now, they've said this, basically through 2030. 2020, they had 500,000 cars, and they expect 20 million cars in 2030 to be delivered per year. That's a 50% growth rate. Now, they expect some years will be more than 50%, some will be less. When you average all those years combined, they're expecting it to average out to 50%. When it comes to cash, they have sufficient liquidity to fund their product roadmap, long-term capacity expansion plans, and other expenses, so cash is not a problem. As far as profits, they expect operating margin will continue to grow over time, continuing to reach industry-leading levels with capacity expansion and localization plans underway. Being able to sell cars from the same country, continent that you are producing them on, is a huge advantage for profits. Now, product, we continue to target our first Model Y production builds in Berlin and Austin before the end of the year. So they are reiterating that. And the pace of the respective production ramps will be influenced by the successful introduction of many new products and manufacturing technologies in these new locations, ongoing supply chain related challenges, and regional permitting. We are making progress on the industrialization of Cybertruck, which is currently planned for Austin production subsequent to Model Y. So after Model Y gets running, they will be making Cybertrucks in Austin. I'm expecting deliveries for Cybertruck to really be in 2023. We might get some at the end of 2022, but it's really a 2023 car. Now, they did have photos, so always great to see photos from Tesla's deck and see how things are going. This is a photo of Gigafactory Berlin's county fair that they threw. Elon's awesome. They threw a massive fair. I'm sure this is helping with recruiting people to work for Tesla in Berlin. I know they definitely need to hire tons of employees at these new factories. So they threw basically, it was like a rave. It was a fair, went late into the night. It was also a factory tour. Lots of great stuff we saw from that. This photo here is not from Berlin. This is from Texas. This is showing the office space. And while basically these Tesla employees are working, they can actually see a nice view of the factory floor, seeing the cars getting made. I mean, it's an awesome place to basically be working. If you are involved in the mission of Tesla and you're excited about it, to see that factory from your office desk. They then show off this, area of the Texas factory, which is the Model Y quality control area. So that's a pretty cool image just to, see the insides of these factories. I thought that was pretty awesome. The next picture we're going to get is basically an aerial shot of their factory in Texas, so Austin, Texas. This is the exterior. It is massive. I mean, this factory is literally humongous. They are making factories that are the biggest factories, in the world, basically. It's really crazy to see. When they first had the Nevada factory, I thought that was huge. These factories are ridiculous compared to those. So, Tesla really goes big. Gigafactory Shanghai, this is their R&D center in the foreground, so research and development happening in China, which is awesome. They want to do R&D centers, obviously, not just in California, but at all their factories, they're going to have R&D centers because you can get really great people who don't want to move to the Bay Area and want to innovate, where they're from or in different parts of the world. So they have R&D all over, and I think that's awesome. And it basically just leads to more innovation. And the final photo that they give us is Gigafactory Shanghai's gigapresses. So these are basically, if you know IDRA, it's a company that makes these presses. They are showing that they have a bunch of these presses being put here. And this is, Tesla does things bigger than other factories, bigger than other companies. There are no auto companies working with these massive gigapresses like Tesla is. And that's what's giving them the advantage. They're willing to take risk and reinvent how a car is made. Now, later in the deck, Tesla always gives us these really awesome pages with key metrics. So here are some key metrics quarterly. Vehicle deliveries on the left, we are seeing quarter by quarter. You can just see how nice that uptrend is. They're delivering more vehicles every quarter. It's a great way to visualize it. The middle one is operating cash flow in blue and free cash flow in red. And you could just see that it is a nice, increase to the right as well. They are healthy free cash flow, great operating cash flow. They have no problems making money. We're talking about billions of dollars quarterly. This isn't yearly. This is each quarter. And then net income in blue on the right side and adjusted EBITDA in red, and the net income and the earnings before interest, tax, depreciation, and amortization. Just a nice increase quarter by quarter, every single quarter pretty much. It's awesome to see, and you can basically just see where the trend is. I mean, the trend is up and to the right. Now, you also get these charts, which are trailing 12 months. So the last 12 months from this quarter's end combined. And you could just see as a full year from each quarter's end how, deliveries up and to the right. Operating cash flow and free cash flow up and to the right. Net income and adjusted EBITDA up and to the right. I mean, it's so clear to see where things are going. When people are saying, Tesla's doomed or this or that, the fear, uncertainty, doubt, the FUD spread about Tesla, I mean, just look at the numbers. Look at these margins, operating margin, gross margin, profit margin, going up. As they reduce prices of cars, they continue to go up. So yeah, I mean, enough said about it. That's the bottom line. Thank you so much for watching. Please like the video if you made it to the end. Please subscribe to the channel. We will definitely be going deeper into actual stock prices and this and that, but this video was long enough. We just wanted to go over the earnings report. If you didn't want to read it yourself, you could listen to this. If you have any questions, just comment below. Happy to answer them. Until next time.